More than half of chief economists surveyed by the World Economic Forum say the global economy will slow this year. Of course, last year at this time here in Davos, the talk was much the same, and that recession, at least in the U.S., did not materialize. We were hearing a lot of optimism, meantime, from CEOs. So let's talk about the risks to the global economy, whether in fact a recession is coming. Kenneth Rogoff, professor of economics and Boas chair of international economics at Harvard University. Ken, thank you so much for being here.
Thank you for having me.
So, a lot of risks still out there. Recession coming or not coming?
Well, I mean, I think, very uncertain, but I'd say 25% chance. I think in a normal year, 15%. And this year, it's got to be higher than that, just given that a few years have passed, given how strong the growth was, how high interest rates are. And I think it's worth bearing in mind, the U.S. has been a little bit of an island here. Europe had a good year because it only had a bad year and not a deep recession. China has been growing very slowly. So it's not that global growth is so great, it's that the U.S. did better than expected. But, chances are we're growing above trend. So chances are it's going to slow down, but I don't think I was in the camp when I spoke to you last of saying, oh, there's definitely going to be a recession, but I would have thought the odds at the beginning of last year were 50-50 that we would have had a recession.
Do you think this is going to be a U.S. economy that needs 4 to 6 interest rate cuts? This is what the market is pricing in now, and I think it's shocking. It's surprising to see investors expect that rate of cuts.
Well, it sort of depends if you think we're going to have a recession or not. If you think we're going to have a recession, yes. But if we're just having a soft landing, absolutely not. I think, in fact, I've been saying this to you for a while, the super low interest rates we saw, particularly from 2012 through 2021, the real 10-year interest rate average 0, the inflation index bond. Forget it. I mean, that's not coming back for a long time. I don't know, ever, but not for a long time. If you look at a long history of interest rates, they have lots of these periods where they're high, they're low, and there's reversion to mean. It can take a while. And I think, by and large, that's what's happening. Maybe the trend's slightly downward, but nothing like if you drew the last 40 years, it goes like that. And anyone who was extrapolating that just had it wrong. So the inflation will come down, but interest rates aren't going to come down proportionately. Now, that's just looking at time series statistic. It's sort of the structure. I hesitate to say exactly what it is because I've been critical of people who've been trying to explain why they're so low, the secular stagnation, never productivity, demographics. But I do think I can point to some things. I mean, one thing is global debt is really high, and the interest rate doesn't respond hugely to it, but it's grown a lot. Second, I can't imagine if we're looking at a long horizon, defense expenditures aren't going to go up worldwide a lot. I want to say in the United States, if they just went up 1%, that's less than I think they're going to end up going up, and that's partly because how much they're going up in other countries. Green transition, which maybe nobody outside Davos thinks is happening, but probably will, and that's going to be really expensive. Whoever wins in the U.S. election or any of these many elections is probably going to be a populist, with the only question if they're a right-wing or a left-wing populist. More redistribution, budget deficits. So I think there are a lot of forces suggesting interest rates aren't going to come down as much. And again, if you look at the forecasts, they're probably a recession's more likely than a boom. So maybe that's partly built into what those predictions are. But I think if we have a soft landing, maybe we'll get 3 cuts, something like that. I think the Fed just doesn't know what it's looking for. It wants to find a path of interest rates so that inflation's stable. They don't know what it is, and they're going to feel it out.
$34 trillion in total government debt. How concerned are you about that?
Well, I think everybody who works on it thinks that it's on an unsustainable trajectory. And this interest rate issue is a big part of the equation. If you believe, and there are many academics I respect who do, that interest rates are going to go back to what they were in the decade running through the pandemic, or even lower, well, it's a free lunch. Modern monetary theory works. You can just do whatever you want. On the other hand, if real interest rates are going to be more like 1.5% that we're paying on debt, and if growth isn't wildly higher because of AI or something, it's not sustainable. And I don't think the politicians in Washington are remotely ready to confront this issue. Not just in Washington, really in a lot of the world.
They're happy to talk about it, but doing something about it is very different.
That's well covered. I mean, here's some of them in the Republican debates talk about it, but it's not clear what they say they're going to do about it.
If we are looking at a world of higher interest rates than we have become used to for quite some time, does that mean we are looking at a world, if not a recession, but sort of permanently lower growth, or at least for the foreseeable future, that we're just not going to be seeing the rates that we saw in the past?
Well, no, I mean, not necessarily. We've had great growth with much higher interest rates over a long period, and many countries have. There are many things that feed into that. I do think it makes the Fed's job harder. There are pressures over the next decade that are very different than we had during the globalization era. So deglobalization, who knows, but probably. Geopolitical risks, probably some of these things I mentioned, like defense spending and such, putting pressures on the Fed. And I should say other things like maybe rising unionization, monopoly power. These may be perfectly good things, but they create more pressures on inflation. I have a couple very bright young co-authors. I've done some papers on this, and our thesis is that over the next decade, you're going to see more oops, inflation was high than disinflation. We can't control it.
Well, that's not good news.
Well, lastly, before we let you go, you mentioned AI. We just talked to Bill Gates, and he said AI may be a productivity driver for white-collar workers. He also mentioned coders. I had a conversation with the managing director of the IMF, said AI might cause the need for more social safety nets to support displaced older workers. Where do you fall in this debate?
Well, the thing is, everything's true, and the question is the pace at which it plays out. I've been an optimist about AI forever, in the sense that I thought it was coming from my days as a chess player and watching it. But what I would always say at the same time is I don't know if our society's ready for it. And there's so many different ways. One is probably lots of jobs are going to be lost at a very fast pace. There are questions like, how it affects warfare, how it affects cyber warfare, how it affects, things like social media and what we see in the elections. So it's a wild card in a lot of things. Personally, I think we really screwed up on social media by not regulating it early and letting it take time to play out. I don't see what harm there would have been if it took another 5 or 10 years to get to some place, even like where we are now. I think it's been phenomenal. I understand all the benefits, but on net, I think if you look at everything from our political dysfunction to mental health, it's been a negative. And AI is 10x, 100x. So although I certainly don't consider myself, ultra left wing, I kind of agree with progressives like my neighbor in Cambridge, Elizabeth Warren, on this, that what's the harm in having more regulation and slowing it down? Not a popular opinion here, but that's the way I see it.
It's not from the folks we've talked to, but it is an interesting one. Ken Rogoff, thank you so much for spending some time with us. Thank you.